What's up, everyone? It's Karthik with MoneyVest, and cat's out of the bag. Tesla delivery numbers are out there. 495,000 deliveries in the fourth quarter 2024, bringing our grand total to under 1.8 million vehicles for 2024, which was a 1% decline on a year-over-year basis. So in this video, I'm going to break down everything you need to know about the delivery numbers that just came out, what to expect from the fourth quarter numbers from Tesla, which they are going to be reporting in a few weeks, and is Tesla cooked? To be honest, there is not a lot of silver lining with these numbers. The EV slowdown really hurting Tesla with their delivery numbers as well. But I'll try to break these numbers down as much as possible, give you guys all the facts, give you guys all the bad, the brutal, and the ugly, and a little bit of good. There's maybe a little bit of silver lining there. But as always, make sure that you drop a like and subscribe to the channel if you haven't already. And again, the links to our Discord and Patreon is going to be down below if you're interested in joining us. And of course, getting access to all the members only updates. I'm also going to be going over my Tesla calls. So this right here are my Tesla calls that I've sold with $800 and $850 strikes, which are currently up 45 and 56% respectively. So I'm not planning on closing these anytime soon, unless of course they get up to over 70 to 80%, at which point I will be collecting all that premium and then we'll be selling new calls moving forward to hedge for that potential downside, because Tesla is now officially down over $100 per share from its all-time highs. It is now officially in also a bear market. So if you come over to our MoneyVest market snapshot, scroll down a little bit, you'll notice that Tesla is now officially in a bear market, down over 22% from its all-time highs. All-time highs sit at $488. It is now trading down to $379, which again is officially down over $100 per share. So again, if you want to get access to all the trade alerts, find out exactly what we're trading, portfolio updates every single week that I send out, as well as watch our performance for 2024. We absolutely ended up crushing the market. Again, not getting ahead of ourselves, but we also understand how to manage risk properly. Link's going to be down below. There's a couple more spots left, and you can also get that 16% annual discount available for a few more days. So first things first, let's talk a little bit about Tesla's delivery numbers. Fourth quarter coming in 495,570,000 vehicle deliveries, and production was totaling 1.77 million vehicle production versus deliveries of 1.789. So production is on par with deliveries, but if you come over to our spreadsheet here, this is the number, which on a year-over-year basis is a modest 2% increase, which again is a very, very slow growth. And this is the only second time Tesla reported for a year-over-year positive number in the entirety of 2024. You'll notice first and second quarters for Tesla in 2024 saw significant declines on a year-over-year basis. Q3 was pretty good, about a 6% increase year over year, delivering 462,000 vehicles versus 435 the year prior. And then, of course, this quarter, only a 2% increase. And then quarter over quarter was a 7% increase. Now, this was still a record quarter for Tesla in terms of deliveries. And that's the silver lining there, that Tesla's never in the history of the company has never delivered almost 500,000 vehicles in one single quarter. Right? So that again is a huge achievement for Tesla and the team. So that again is a huge silver lining there. But what do investors look at? What do analysts look at is year over year. And for the entire year, Tesla ended up delivering 1.78 million vehicles, which of course is a 1% decline on a year over year basis. So much so that they also ended up missing expectations, whatever those expectations were, of well over 505, 511, 515,000. There was a lot of numbers on the street. So again, I'm going to be very objective and give you straight up, Tesla did deliver a pretty bad delivery report. I mean, 495,000 was not expected. I was expecting at least 500. Like 500 was kind of like a baseline for Tesla, and had they achieved that, it would have been essentially flat on a year-over-year basis, coming in at just shy of 1.8 million. But of course, we're coming in at 1.79. Now, this right here is all the delivery numbers since 2013. I wanted to kind of really compile this together for all of you and also go over the CAGRs, which is the compounded annual growth rates. And what you'll notice is that this was the first annual decline for Tesla since 2013. You can see that, Tesla's been able to achieve, at least over a 20% increase, at least a 30% increase actually. So if you take an average of all of these numbers, the average comes out at 58%, and there is no number below 30% for Tesla deliveries. And so 2024, we're finally starting to see some moderation, some flatlining in the overall top line deliveries year. So you can see 41%, 60%, 49%, 138% in 2018, just a phenomenal growth there. 88% in 2021, 40% growth in 2022, and then a 38% growth in 2023, crossing over 1.8 million. And of course, this year, 2024, we see the first annual decline. Not only the first annual decline, but also the first time Tesla did not achieve a 30% growth on a year-over-year basis. Now, if you take a look at the compounded annual growth rates, since 2013, the CAGR is now sitting at 49%, which actually is still pretty solid if you think about it. The last 10 to 11 years, Tesla's been able to grow their delivery numbers on an annualized basis by over 49%, which is actually on par with their 50% target. The last 7 years, if you consider from 2018, they are also on target at 50% growth on a compounded annual basis, right? So again, compounded annual growth rate takes into account both the highs and the lows, and it kind of analyzes that number, and Tesla's still able to grow deliveries by 50%, despite what this last year was, a 1% decline. Now, really in recent years is when that number starts to taper off. If you look at the last 5 years and 3 years, that's when the numbers are starting to come down from well over 50 to 60% down in the 30s and 40s, and now this is actually coming down in the 20s. And this right here is simply the law of large numbers. As numbers get bigger and bigger, the growth rates come down. And as a result, the compounded annual growth rates and the year-over-year increases are not as substantial as what they used to be when the numbers were smaller. So hope that makes sense. And over time, this was kind of like a known, but still the market likes to be surprised. And, they were like shocked by seeing these numbers. Of course, 1% decline is not something that any Tesla investor would want to see. However, this is how law of large numbers work. As numbers get bigger and bigger, the growth rates are going to go smaller, right? So think about it. Very simple example I can give you is look at the economy over in the US and look at the economy over in India. The growth rates are vastly different. Why? Because the economy in the US is well developed. It's over $30 trillion versus in India, which is significantly less. And so the growth rates are much higher compared to the US. So that again is the law of large numbers. And eventually, I think this number is going to settle in around 15 to 20%. It could very well come down in the 10 to 12% range also, as Tesla's delivering multiple millions of vehicles every single year. So that right there was the delivery overview. But now I really want to go over the numbers for revenue and average selling price and margins, because this is really what's going to dictate the company's long-term fundamentals. And do they really have a moat? Do they really have any kind of leverage that they can pull on to increase their potential profit? And so I've essentially taken into account simply the automotive revenue, so the revenue that they are collecting by selling their electric vehicles. And then if you take a look at their deliveries, you can calculate the average selling price very quickly. So you can pretty much take into account the revenues divided by deliveries, and you get a nice average selling price. And that number, of course, has been coming down. And that's the whole idea behind owning an electric vehicle in the first place, is that your cost of ownership is going to be significantly less compared to a gas powered vehicle, right? Or an ICE vehicle, internal combustion engine vehicle. And so you'll notice that as economies of scale kicks in, as Tesla is becoming more efficient with more production volumes, average selling price has come down from a whopping $89,000 back in 2013 to now sitting at $45,500 as of last year. And 2024, I'm estimating it's going to be sitting somewhere around $42,600 on average to own a Tesla vehicle. And that is simply based on the fact that we've seen a 6.5% annualized reduction in average selling price every single year. So in other words, every single year, Tesla vehicle prices have dropped by an average of 6% or 6.5% every single year for the last 10 to 11 years. So keeping that in check, we come out to a 2024 ASP of around 42,600 multiplied by the delivery numbers of 1.79 million. We come up to an automotive revenue of just over $76 billion. That's actually going to be a 7% decline on the top line on a year-over-year basis. And that is, again, going to be the first ever annual decline on a year-over-year basis for Tesla. Now, this again is, we don't know if that's actually going to take place. Like, of course, Tesla is going to be reporting their fourth quarter delivery numbers, the revenue numbers very soon. But 18.98 is actually going to be the Q4 revenue expectation. If you come over to TradingView and you look at the revenue expectations here, it's much higher, 27.3 billion, but that's also including for the energy business and all the other services that Tesla has to offer. I'm only accounting for the automotive revenues here of 18.9 billion. And so maybe another few $1 billion coming in from energy services, all the other businesses that Tesla has. So this is strictly looking at automotive revenue. And this number could also get revised up or down, again, as we get closer to the earnings. Now, I also do believe that there's going to be some downgrades coming in after the delivery numbers that were just reported. Analysts on Wall Street may lower their expectations for the Q4 earnings. And so this would be kind of like an estimate of what Tesla might end up reporting for automotive revenues in the fourth quarter, which would bring the total at just over $76 billion. That's about a 7% decline, could be the first annual decline for the company on a year-over-year basis. So again, we're going to have to wait and see what those numbers end up looking like. Automotive cost. Now, this is the interesting part, and this is the most important part, is that does Tesla actually have any kind of leverage, operating leverage, and some kind of moat, which it can really protect its profits over the long term. And you'll notice that automotive cost also has increased substantially from 2.2 billion to now sitting at well over $65 billion as of last year. I'm estimating this number to be around $60 billion. That's going to be a potential number there. And that is going to actually be a decline of about 8% on a year-over-year basis. So that would simply mean, so far Tesla's already incurred about 45 something billion dollars in automotive cost. Another 15 billion in the fourth quarter is going to bring this total up to $60 billion. Of course, the higher this number is, let's say that it's 18 billion, then we're simply looking at around 63 billion for the company. And that's going to be only a 3% decline. So we're going to have to really wait and see what those numbers end up looking like. But the real question then is going to be the margins and the leverage. And this is where that comes in. So you'll notice that Tesla's been able to maintain at least over 20% automotive margins over the last 10 to 11 years. In some cases, they've actually hit 31%, but they've been well over 20%. And I think the last thing that investors and analysts on Wall Street want to see is that this number trade below 20%. So if automotive margins actually trade below 20% for 2024, when Tesla reports for the fourth quarter, if this number dips below 20%, I think Tesla could be in some deep trouble from a price standpoint, from a technical standpoint, from a momentum standpoint. I think a lot of that could fade, and we could see Tesla in the 350s and low 300s again. Again, I'm not going to sound the alarm. I'm not going to be, bearish, but I'm just giving you facts straight up that if the cost increases a lot, right? So if this increases back up to, let's say, $65 billion, now we're looking at a 15% automotive margin, which is significantly lower than last year, and its 10 to 11 year average of about 24%. So this cost maintenance, very, very important for automotive. Right now, like I said, we're at 45 billion. And if Tesla is able to, incur another 15 billion, that's going to put us at $60 billion. It's going to be on par with last year's margins of 21%. And it's still going to create some automotive leverage, meaning that we're still going to be closer to 1. And we want to be closer to 1, right? So in other words, we want the revenue increase on a year-over-year basis to be more than the increase in cost. And it works on the other way too. Like, we want the automotive revenue decline to be less than the decline in cost, right? So in this example, if it's $60 billion, you'll notice the cost decline is 8%, which is more than the decline in revenue, which is 7%. That's a good thing. Why? Because even though the costs are going down 8%, revenues are going down less. So there's maybe some leverage there. In previous years, you'll notice that in many years, excuse me, in many years, you'll notice that Tesla's been able to achieve over a 1 for operating leverage. And in more recent years, it's been coming very close to 1, meaning the increase in cost is more than the increase in revenue. And we don't really want to see that. We don't want to see that. We want to see this number over 1, because that is the operating leverage, the automotive leverage the company is able to achieve. And same thing is true for, again, the operating leverage, which is over here after accounting for operating expenses as well. So the bottom line is, and again, coming back over to the technical analysis for Tesla, Of course, this was a brutal sell-off, down over 6%, down almost $100 billion, and from its all-time highs, again, down over 23-24% in a bear market. We're now down to a very important level of support. So this right here is an area of support for Tesla. So you'll notice we obviously went up very, very fast after Trump winning the election. And of course, the RSI became very overbought, stretched to the upside, even on a weekly time frame. You'll notice the sell-off pretty much looks like it's only getting started with this big weekly candle coming in, with a lot of losses. And I also mentioned this right here as a candle, which was a little bit of a significance of this change in direction, right? It kind of marks the top with a lot of sellers stepping in at 485 and pretty much taking profit down to as low as 417, 420. Then last week we saw a little bit of that, momentum coming back in. But of course, this week it's very clear that Tesla is in some trouble here from a technical analysis standpoint, as the RSI is kind of rotating back lower, MACD's coming down, and there is some serious profit taking coming in. So what I would do is I would really watch this support at 367. So, inside this green rectangle, so if I really mark this level as a support as well, you'll notice that right there is going to be that support level to watch for Tesla. Let me just go over this chart here as well. So you'll notice that this right here, I can extend that just a little bit down further, because historically that's also been an area of support for Tesla. So that right there, if this level doesn't hold up at 372, 375, low for the day was 373. So if this level doesn't hold up, then I think there's a very, very high chance that we actually trade down to low 300s again. So this right here could very well be an area where Tesla could settle in and really just, find some support, find some demand in and around these levels. And that is going to put us down from our all-time highs a little bit over 40%, which in Tesla's case is very normal. I mean, it goes up 150, 200%, then it drops 30, 40%, then it goes up another 100%, then it goes down 50%. It's very normal for Tesla to behave in such a erratic and volatile fashion. So support level, keep in mind, 372, 375, already down over 20% after these delivery numbers. Now, earnings is really what's important here for Tesla to deliver and for these fundamentals to kind of hold up to what the price and the valuation is trading at. Now, again, I've mentioned this before, objectively talking about these companies, they are very expensive, trading at very expensive valuations altogether, but that's what growth investing is all about. You are investing in companies on future earnings. I don't like to do that because, again, I like to look at the valuation first. I like to look at the fundamentals first and then make a decision whether it's actually worth buying or not. So I've been talking about this, over the last couple of weeks, why Palantir, Tesla, even Nvidia to some extent are stocks that are trading at very expensive valuations. So I think investors need to be very, very careful at these levels. So that's why I'm hedged. That's why I've been selling calls to take advantage of this right here. If of course the price comes down, if there's profit taking, at least I can hedge my positions and collect some premiums and profits along the way. So again, if you want to get access to all that, link's gonna be down below. Hope you enjoyed this video and found it helpful. Long term, a lot of things are unchanged. Long term, I do still believe Teslas can get up to 2, 3, 4, 5 million vehicle deliveries per year. And that's eventually going to increase the revenue and the profitability for the company over the long term. But on a short term, more technical basis, I do believe there's going to be some downgrades from analysts. Support level, keep in mind, at 372, 370. And of course, if we do end up, let's say, breaking down below this, next target's going to be down in the low 300s. As I hate to say it, but that's going to be that support level to watch, with the resistance, of course, back up to as much as 460s and 450s. But Tesla would need to recoup $400 before we have any opportunities of getting back up to 450s and 480s again. So there you have it. That's the entire update. Hope you all enjoyed it, found it helpful. Make sure that you drop a like, subscribe, share this video with other traders and investors of Tesla. Happy investing. I'll see you all in the next video.